In income tax, section 2 is all about definition section. Okay, lots of terms are defined under this head. Anyhow, we can choose few of them for the immediate requirement. Okay, rest now and then we can discuss later on whenever it's in need. Okay. Now, section 2 clause 7 is all about SSC, assessment, India, what is income, who are called persons, firm, partner, partnership, defined. 17, clause 17 is all about company. 22A is all about domestic company, Indian company, foreign company, company in which public is not substantially interested, what is called amalgamation and demerger and all. So these are the definitions are going to be covered here. Assessee means a person by whom any tax or any other sum payable, money is payable under the act. Okay, Government of India and Mr. A. If Mr. A is supposed to pay any tax, okay, not only tax, any other amount, other than tax, any file, penalty, anything payable, naturally Mr. A being the assessee. Naturally Mr. A being assessee. Clear? On whom how much money recoverable by the government is calculated, which is called assessment. I am going to assess whether he is going to be liable. He is going to be liable to the Government of India. Okay, Mr. A is the income earner. For his income, he has to pay the tax. Government assesses and charges the amount from him, levies the tax and collects it. So, Mr. A is the assessee. Not only that, the most important point is this one, includes. The amount may be paid or payable. Paid or payable. Whatever it may be, both will fall under the same category. Sir, already paid, sir. He is no more assessee. Can I do that way? No. Whether it is paid or payable, then he becomes an assessee. Now, paid or payable. Not only that, also includes. Clear. You have to understand the term includes clearly. What is called includes? What is called includes? So includes is nothing but whatever the terms given further will be an example, like there may be n number of other possibilities also available. Definitions will always have inclusive definition as well as exclusive definition. If the term says that it is exclusive definition, whatever the term mentioned in the act is the final, not more than that. Even single word will not be beyond that. Inclusive means some illustrative number may be given or terms may be given. Similar nature, if you find some other, also be considered as assessee. So always cross verify whether the definition is inclusive or exclusive. Here it is inclusive definition. So as per inclusive definitions, we have 3 more points also be considered as assessee. Right. Point number 1, every person in respect of whom any proceeding under this act has been taken for assessment of, okay, for the assessment of his income, the income of any other person in respect of which he is assessable, okay, the loss sustained by him, the amount of refund due to him in all the cases, okay. So Government of India or Income Tax Department has a doubt. Mr. A has earned some money. Okay, he thinks if it is more than 10 lakhs taxable, but actually Mr. A earns only 1 lakh. But the government has a doubt, Income Tax Department has a doubt, he may earn 10 to 15 lakhs also. Actually his earning is 1 lakh, not required to pay any tax. Because of the clarification, government takes any action to verify his own accounts, then also he is an assessee, not being the taxpayer. So you'll just now understand the difference between taxpayer and assessee. Taxpayer is the person who is paying the tax. Assessee, on whom whether he has to pay the tax or not is going to be verified, then also he is an assessee, not required to be a taxpayer. In the previous class, I explained about the steps for tax calculation, where I just explained the concept of clubbing. My income is high. I had to pay huge tax. Up to certain level, 3 lakhs, I no need to pay the tax. As my income is more than 50 lakhs, I fall in the higher tax bracket. I have to pay huge tax, almost 30%. In order to avoid the taxation or evade taxation, some part of my income is named as my spouse income or my daughter's income, my minor daughter's income. Right? If I'm renaming my income as my other relative's income, the government has the power, the Income Tax Department has the power to club that income also as my income. Mr. A and probably Master A, his son. Master A says, I have 5 lakhs rupees salary, up to 5 lakhs I no need to pay the tax. Immediately Income Tax Department has a doubt. Master A gets 5 lakhs means how does it get? Will it be because of transfer of any asset of Mr. A or anything given at free of cost to divert or evade the tax? To consider that part also, Government of India takes action on him to assess, show me your accounts, to check whether this 5 lakhs is yours or you earned through your father and all. Then Master A is also assessee, Mr. A is also assessee. But on scrutiny, Master A has no income, zero income only. Anyhow, though he has no income, but Mr. A's income is verifiable only when we verify Master A's income also. That's why the Income Tax Department verifies his income, then Master A becomes assessee, not being the tax. He has no income, still he is assessee, because we have to assess whether he has any income, which is actually income of Mr. A. Clear? Not only that, in case of loss, only when you have the profit, you pay the tax. But I have the loss. Okay. So I show my loss being 5 lakhs. Do I want to get my books of accounts assessed by the assessing officer? Or assessing officer restates that you have to show your loss being only 1 lakh, not 5 lakhs. What's there? In case of 5 lakhs, you don't need to pay the tax. In case of 1 lakh, you don't need to pay the tax. But the problem is, if you are showing higher loss, in the next year's profit, you can adjust this loss. In the next year, you earn 50 lakhs profit. If you could have shown for 5 lakhs being the loss, you adjust this loss, and for 45 lakhs only you will be paying the tax the next year. The government denies, no, you can subtract only 1 lakh. Though you have profit, you may be assessed. Even though you have the loss, also be assessed. So you are being the assessee. So every person in respect of whom any proceeding is their action. Assessment officer's action. Sir, I don't pay any tax, sir. I don't have any income. Doesn't matter. I will confirm. If we come for confirmation whether you have income or not, or if there is any evasion or not, then you become assessee. If you are falling under the scrutiny of the assessing officer, you become assessee, not only the taxpayer. That's why the term includes this there. For what? His income of any other person, in respect of which he is assessable. Master A is assessed because of Mr. A's income's requirement. He is also assessee, he is also assessee. Master A says, sir, I don't have any cash. Anyhow, I have doubt whether Mr. A's income is clubbed with your income. So I have to check you. Verify that. Then Master A is also income. Not only income, sometimes loss also. And Mr. A says, sir, there is a TDS. There is a TDS, tax deducted source 5 lakhs. But actually, I no need to pay tax, sir. Unwantedly, my 5 lakhs is debited and given to your account, sir. Give me back. That's called refund of tax. Refund of tax also possible. What is called TDS? Tax deducted at source. Let me explain the concept of TDS first of all. So already I explained these terms in the previous class. I mentioned the previous class, but I have not explained TDS, TCS, and advanced tax. Here I will explain the concept of TDS. So who has to pay the tax as per the income tax provisions? The person who earns has to pay because direct tax. Impact and incident will be on the same person. If Mr. A earns a salary income, probably employer, from the employer he gets a salary. He rendered service, employment service. For this employment service, the employer offers him salary. Now who has to pay the tax to the government of India? A has to pay the tax to the government of India. Is that clear? For example, his salary being 10 lakhs and assume the tax payable on this being 1 lakh. Okay, 10 lakhs. So after deducting 1 lakh, he gets only 9 lakhs for his disbursement. So for the year end, he shows that my total salary for this year is 10 lakhs. Out of the 10 lakhs, the tax comes around rupees 1 lakh. I'll pay this tax to the government of India. I am the reason for earning the money and I am responsible for paying the tax. As both the parties being the same, impact and incident are the same person, then it's called direct taxation. Government says, in case of this tax payment, A can simply cheat or abscond or miss. Automatically this 1 lakh will be cheated, will not be payable to the government. He just abscond outside India. Or he says, I spend everything, I don't have any money. Then how can we recover? Government says, okay, I'll now give responsibility to the employer to collect and deposit some amount. So as per the revised provision, salary being 1 lakh, responsibility is given to the employer, the payer. While making the payment to the recipient, deduct small amount for the taxation, named as tax deducted at source. So out of 10 lakhs, employer considers it may be around 80,000 rupees something. 80,000 rupees something. That's how we consider, and releases 9.2 lakhs. The amount deducted is deposited with the government of India. Government of India. This one is named as TDS. This one is named as TDS. Is that clear? Clear? This one is named as TDS. Tax deducted at source. Which is the source? Receipt of the salary income is the source. That source time itself, the amount is deducted and deposited on behalf of you. Whose money is this? It's your only. This 80,000 is yours only. So, employer deposits 9.2 lakhs in your savings account, 80,000 to the government of India's account. Sir, is it government's money? No, it's my money only. In my name, it is available with the government of India. Year end, he finalizes and finds the tax payable being 1 lakh. What is his income? What is the income of A? No, 10 lakhs is income. 10 lakhs is income. The TDS is also his own income. The amount credited in your bank, the amount you receive in cash, amount credited in your credit card account somewhere. All these things your own money only. The salary is 10 lakhs. 9.2 lakhs is credited in your account. Another 80,000 is credited in the government's account in your name. That's also your income is 10 lakhs. For the 10 lakhs, the tax payable being 1 lakh. At the time of paying the tax, you tell to the government, sir, my employer already deducted 80 and deposited, so I'll use this now. I now pay only 20. You understand? Rather than employee pays the money, the tax completely at the last, making the employer deduct and deposit some portion, and final day he again verifies and finds the correct one. While making the payment, the TDS already paid, subtracted balance is paid. Suppose if the tax amount being rather than 1 lakh comes around 50, he calculates the tax for the 10 lakhs and it comes around 50,000 only. Immediately it demands, sir, my tax for this year is only 50,000, sir. But my employer deducted and deposited 80,000 rupees in my account with you. Oh, is it so? Yes, sir. Then you can get the refund of this. You can get the refund. That's also your money. The amount with the government account in the name of TDS or TCS or advance tax is your money only. While making the payment, you can use all this money. While making the payment, you can use all these things. So, We have seen the steps in the previous class. The net tax liability payable, from there we subtract the TDS, TCS and advance tax. TDS is what? While getting any resource or any benefit, the payer deducts and deposits on behalf of me. Then what is called TCS, or tax collected at source. Just to think over car dealer and A. Car dealer purchases the car for rupees 10 lakhs. For that, A has to pay consideration 10 lakhs. While paying the consideration, he has to pay the tax also, probably 0.1 lakh payable. So now this car dealer collects 10 lakhs plus small tax amount on that also, that will be called as TCS. This is also deposited with the Government of India. In the year end, once you finalize your tax payment, while making the payment, TDS is already available in our account, which is mine only, can be subtracted. TCS also, your own money, can be subtracted. Clear? This is called TCS. While spending, for any payment you do some additional payment for the tax also. It will be very, very small money, probably 1% like. Why, sir? In order to avoid the cheating. You may use the black money to purchase a car. Okay. So car, you just think, or if you have 50 lakhs rupees, as you are following the higher tax bracket, 30% comes as tax. 15 lakhs tax has gone. So 35 lakhs is your disbursable income. Toyota car, Innova, 35 lakhs. Zero. You have nothing. Rather than that, you earn 50 lakhs cash. Don't pay the tax, you hide. Directly purchase Innova car for 35 lakhs. Still you have 15 lakhs cash in your account. Isn't it? That's how you can cheat, right? Currently, if you want to purchase the car, beyond 1 lakh, you have to pay only through account, bank account. So automatically the government knows you are spending so much money, okay, through bank account, then they will have doubt how you will get this money. Okay, if you don't explain properly, this will be considered as your income, and 78% tax will be leviable. Last class you said 78% tax will be leviable. Is that okay? Anyhow, for this scenario, okay, to confirm that the car dealer has sold this much of worth the car to you by collecting this 1% and deposited. Okay, while filing the tax return, you say, I have not purchased any car. But you have to tell you, if you are purchasing any car, bungalow, you have to intimate. But you say, I didn't purchase anything. No need to worry about that. We have the details. If the TCS number is tracked, and your name will come. Here is 10,000 rupees deposited for the car purchase. Where is the car? Oh my God. So now you get car. So you have to show that you have purchased the car. No other way. In order to confirm the transaction is happened, this 1% and 2% is collected in case of TCS. Okay. So you can of course buy the bicycle, no problem. Okay. You no need to come under this. So only in the case of car, alcoholic liquor and some forest products, in those cases TCS will come. Very rare, small topic. If you are visiting foreign country, what are the amount you pay for tourist tour organizer? For that you have to pay the TCS, small amount. But TDS predominant, whatever it may be salary, brokerage, commission, or maybe some consultancy service, dividend, winning from betting, gambling, lottery. In all the cases, TDS will come. Okay. Hope. So when your account has more money with the bank, then the amount payable by you as a tax, that will be refundable. To calculate the refundable amount also, this comes, amount of refund due to him. All these cases, A being the assessee and his son also being assessee. Clear? Not only that, every person who is deemed to be an assessee or deemed to be an assessee in default, they are also coming under assessee only. Deemed to be an assessee and deemed to be an assessee in default. Clear? Now, deemed to be an assessee and deemed to be an assessee in default we'll study later on. So who is called assessee? Taxpayer, and includes any proceeding under this act for assessing his income, other person income in order to assess his income, or any loss sustained by him or other person, or any refund. Apart from that, deemed to be an assessee in default. Deemed to be an assessee in default. Deemed to be an assessee in default is nothing but employer's responsibility, right? Employer, while making the payment salary, he has to deduct and deposit to the bank. No, it's not his own responsibility, yet he has to do as per the TDS. If he fails to do so, then he falls under deemed to be an assessee as well as assessee, deemed to be an assessee in default. All these things will come. We'll study along with TDS chapters here. Not now. Clear? Single letter of enquiry was issued by the Income Tax Department to Mr. Soumik of Pune. In this letter, there was no specific mention of any provisions of the Income Tax Act. Can Mr. Soumik be treated as an assessee under the Income Tax Act? So, if he comes for any inquiry, automatically he is an assessee only. He is an assessee only. Yes. He is not required to pay any tax. Automatically, he falls under assessment only. He is the assessee here. Clear? Now, assessment. Okay. Assessment is nothing but whatever the income you submitted. Okay, you have to file ROI, return of income. Return of income. My salary income, rental income, house property income, business income. I have the property and transfer and made a profit, capital gains income, income, other sources. These are the income. I show all this income put together comes around rupees 30 lakhs. 30 lakhs. Is that okay? And you have to verify all these things and submit this to the government. If there is any doubt, the department, okay, income tax officer, ITO, will come for the assessment, or assessing officer will come for assessing it. You write the test paper and you evaluate yourself before submitting. Okay. After that, teacher will also comes and assesses your paper whether you have written the exams correctly or not. You check yourself, also assessment. Teacher verifies, also assessment. Okay. Will the teacher read your paper in careful mode while valuing? No, here or there he just sees the title and puts a tick mark. Not possible to read all the lines, especially in BCom undergraduation. They will just see the pages and give mark directly. Okay, no one knows what you have written and what the teacher thinks about your paper. You will get the mark, right? Is that not? See, you have taken 3 hours to write your exams. Maybe if you want to read the same again yourself, how pity it is. You write and read your own paper. So pity. Clear? What happens? The teacher who reads 100 such papers, the same happens. He just checks here or there and gives the mark. Similarly, for the assessment also, now and then he verifies based on the different numbers, odd numbers. Odd number means Mr. A, who pays tax year on year 50,000 rupees around. Suddenly in a year he paid 5 lakhs tax alone. Or suddenly in a year he pays just to 5,000 rupees, then he gets doubt. When he verifies the bank account, the amount credited and debited in the bank account is anywhere between 40,000 to 1 lakh. Suddenly, one transaction carrying 50 lakhs rupees credit in the book, immediately it comes for the scrutiny. Okay. So, such variation is there, then the assessing officer will come and verify, comes under scrutiny assessment. So, assessment is nothing but you check what you submitted is correct or not, which is called regular assessment, and also includes reassessment. Okay. This is nothing but income determination procedure of an assessee. Regular assessment and reassessment, scrutiny assessment, best judgment assessment. We have so many assessments also. I think at inter level you have self-assessment. Rarely you have the best judgment assessment as a theory, not beyond that. So assessment is nothing but income determination procedure. Can be done by yourself. Assessing officer will do. And if there is any verification requirement further, then go for the reassessment. Section 2, class 8. This one is most important, section 2, class 31. Assessee is most important. Next one is as a person is most important under section 2 clause 31. So 2 into 3, 6 plus 1, 7. To have the section number easily remembered, 7 persons are there. Don't go with the mathematics here. It's only for the memory mapping. 2 into 3 plus 1, 2 class 31. Section 2 class 31 defines what are the types of persons we have. What are the types of persons we have? Is that okay? Individual, Hindu undivided family, company, firm. I hope so. Among the four, three are most popular. You know that: individual, company, and firm. Right? And we have AOP and BOI, Association of Persons and Body of Individual, a local authority, and every artificial judicial persons or juridical persons not falling under the above 6. Above 6. These are the 7 persons we have: individual, huff, company, firm, and AOP and BOI, and local authority AJP. Artificial judicial persons are all these persons in detail, right? Now, individual. Individual means only the natural persons. Okay, natural persons. We never bother about the any legal entity. Sole trade business. If I have a sole trade business, buying and selling of stationery, can I consider this being the separate entity? No, it's not possible. It will be linked with the original owner. Okay. Partnership, okay, it's a separate entity for the taxation purpose. Is that clear? So individual means natural person. Also includes, again, this definition is inclusive nature, includes. We need to include minor, person of unsound mind, and deceased person. The three will also be falling under individual for the taxation purpose. Minor, person of individual unsound mind, and deceased persons, apart from the other natural person you say. Minor, that you know the age is less than 18 will be minor. Minor will also make some gain, some profits, right? The gain may be due to parents' fund or due to personal ability. Parent may give around 5 lakhs or 10 lakhs rupees in the name of a child, and child will do some trading business or something, or investing in the bank and gets interest. Or the child will have some talent like Gugesh, chess player and singer, gets money. We have two classification. The minor child makes the money out of the skill, independent skill, talent. Another one is out of the money supported by the parents. If the money is received from the parents and investing getting money will be clubbed with the parents only, it's not his own personal income. Talent and skill, using that, if he earns that, or if he or she earns the money, it will be that minor's income only. Minor's income, again, he or she should disclose to the government and should pay the tax. But before, as the age is less than the contractual age, instead of the minor, guardian should sign. Guardian should sign. The rest will be the same. Minor has to pay the tax for what income? Her or his income out of skill, talent, whatever it may be, not because of the fund collected from his parents. Person of unsound mind, okay, unsound mind, lunatic, insane, okay, not capable of thinking properly, not in a good mood, coma, a person with huge wealth, met with accident, lying in the hospital in coma. Now, what happens for the tax payment for him? Any authorized person for him should take the responsibility. That person or person of unsound mind is also responsible. In that case, assessment done on manager, on his manager. The property manager will be responsible. In case of minor, guardian will be taking responsible, or sometimes he may have the manager also. Clear? Deceased person, Mr. X died. Okay, on 1/4/2024 and the year ends on 31st March 2025, he has to pay the tax on 31st March 20, sorry, July 2025. He has to pay the tax and file the return. Exactly one day ago, earlier, 30/7/2025, he died. Now, who has to pay the tax? And automatically, his legal representative has to pay the tax. If he says, sir, I am not responsible, sir, no problem, give all the income to me. Government says, as you are not responsible, give all the income to me. No, sir, I am responsible. Okay, give me after taking the tax. You give me tax and rest you can take. Now you tell me, will you want to take fully or partly, or you will give the money to the government? So automatically the responsible person, legal representative will be responsible. So in case of individual, natural person, minor, unsound mind, as well as even deceased person also. Okay. In case of minor, his guardian will be responsible. In case of unsound mind and legal representative, means manager will be responsible. In case of deceased person, his legal representative will be responsible. So I hope you have completed the individual concepts clearly. Now let's move on to the next one. Hindu undivided family. Hindu undivided family. So this system becomes very less practical currently. Okay, anyhow, just understand Hindu undivided family. Mr. A, okay, and Mrs. A, collectively they own son 1, son 2, son 3, daughter 1. Okay, and son married, daughter-in-law, the relationship between daughter-in-law. Here, son-in-law. Okay, daughter married. Okay, after marriage, the spouse of daughter becomes son-in-law. Here you have again children, son, daughter. Okay, second layer also we have son and daughter. Again here we have one more layer, like, okay, son of son, maybe grandson. Okay, grandson married to granddaughter-in-law. Again you have great grandson and great granddaughter, like 4 generation I'm talking about, keeping Mr. A being the top. This will be a family. Most of the cases, the family owned business still exists in India. Okay, the entire family lives as a joint family. Probably Mr. B being the brother of Mr. A, maybe. The entire team put together will be called as Hindu undivided family. Hindu undivided family. In this Hindu undivided family, I marked in red son, grandson and all will fall under co-personers. Okay. Those green color represents only members. Even not this one. Okay, leaving this one, others are called members. The difference between co-personers and members is nothing but eligibility to get any share in the assets, family property. While dispersing the family property, these co-personers are eligible for getting a share. Okay. Now, including daughter also. Daughter after marriage becomes member in another family, probably Mr. X. Okay, she moves there. Okay, and she becomes member in Mr. X hub and co-personers in Mr. A hub. So, in which family she born? That's the matter to determine whether she is co-personer or member alone. So, daughter is the co-personer in this family, becomes member here, and daughter's spouse is the co-personers in this family. So the girl will have to have in general. In one half, she has the power to earn the share. In another property, she is being only a member. Clear? Only a member. Clear? Up to 4 layer, including the top layer, 4 layer having the rights to earn, means get the share. If the son still has one more son and daughter, what about this scenario, sir? They are not eligible for getting the right in property. They will be just members. Fifth generation. Have you seen any fifth generation family nearby you? Or are you falling in any fifth generation? Huh? Sir, 4 generation itself is very tough, sir. I don't have great grandfather at all. Huh? So great grand, okay. This is the another generation. Definitely, it's not possible. But my daughter has seen fifth generation also. My great grandma saw the fifth generation kids, almost 4 kids, I think, including my daughter. Okay, expired in 2012, like 12 or 10, 13, she expired. By the time she saw almost 4, 5, fifth generation kids, including my daughter. Okay, now it's not possible at all because she got married at her 11th year age. 11th year age. Okay, what about your age now? Okay. So practically it's not possible. By the time it was possible, 11 years old. Clear? 4 layers are possible. That too from the same family, male or female are eligible. Beyond the 4th layer, not eligible. Beyond the 4th layer, not eligible. And any law, daughter-in-law comes from other family, just being the member, not eligible for the property share. Property share. Clear? Now, the predominantly Hindu undivided family, not necessarily being only Hindu, maybe Jains. Jains and Sikh will also be considered as Hindu undivided family only. If a Jain family runs a business, in most of the cases you may see the sweet stall run by the Jain family, okay, or Sikh family in North India. One of my students who does good also in his exams, but immediately after the first group he left the job. Sir, I don't want to continue this. Why? I want to go with my family business. Okay, though they are capable, they will live within the small family itself, so they want to do the business family wise. That family business will be identified as half. Hindu undivided family. Mr. A does the business. A sweet stall is run by Mr. A, where in sweet stall the entire family will be working. In the morning you see the dad, and afternoon you see the first son, evening you see the second son, and preparation done by some of the other team. Even sometimes small kids also will serve. It will happen. Then who has to pay the tax? For the entire sweet stall business, if they earn around 10 lakhs rupees, tax 3 lakhs will be payable by whom? Half has to pay. The responsibility is not for any of the members. Half collectively will pay. Balance 7 lakhs, can be distributed to anybody. That is not going to be taxable. The Hindu undivided family in its name runs a business, makes 10 lakhs rupees profit, pays 3 lakhs tax. After payment, 7 lakhs left over, Mr. A distributes to son number 1, 2 and all. While distributing, it is not going to be taxable in their hand. Exempted because it is already taxed. It is already taxed. Hindu undivided family has to pay the tax. My grandma, just now I told me, she was running the jowli business, cloth store. Even at my age 4 or 5, I was taking the accounts. I just count, especially in Diwali day, the sales will be higher or no. I just start count all this in the manual by the time. No calculator also. We play with that numbers and we'll get somehow few times later we'll get correct answer. Around 100 numbers will be there. If I count, no, definitely there will be mistake. Okay. So today we have the calculator, still we make mistake. Right. So co-personers. Here, the head of the family, is called as Karta. Head of the family is named as Karta. All the red will be named as co-personers. The boxed Mr. A is named as Karta. Okay. The green, usually members except this one. Okay. They are the in-laws, daughter-in-laws and all. Okay. Granddaughter-in-law and all are members. A daughter married and become member in the another family, but still she enjoys the rights to share profit from here as being the co-personers, right? And the karta not necessarily male, even karta could be female also, okay, as per the amendment. Male, not only male, female can also be karta. Earlier, okay, only male can be karta. If Mr. A died, only Mrs. A exists. Okay, Mr. A, Mrs. A. Okay, and they have son Mr. X. If Mr. A died, this becomes half where Mr. X becomes karta. Mr. A, Mrs. A, Miss X being the daughter. If Mr. A died, we have only two lady members here. Two lady members cannot form half. Half is dissolved. Was the earlier one. Now this one is also be considered as half. Britishers period, you know. If the family has no karta, thereafter the property is not owned by that half, it will be taken by the government. Have you heard about that? Very interesting. Okay. In this scenario, no problem. Mr. X has the right to enjoy the property. In this scenario, we don't have male members. Then what happens to the property of the half? There is no entity. Then automatically this property is taken by the government. Okay. This one happened. In which one? Really, Jhansi Rani case. Jhansi Rani. You have seen that movie of Jhansi Rani? What's the movie name? Do you know? Jhansi Rani. What's the name? What's the movie name? Manikarnika. Correct. Manikarnika. Okay. You just go and watch that movie now. So Jhansi Rani has no son. So immediately British had demanded to hand over the kingdom to government. That's how the war sprouted out by the time. Anyhow, today half can be formed by ladies alone. No problem here. You understand now? Okay then. Which consisted of all persons lineally descendant from the common ancestor. Okay, common person should be there. And includes their wives also. Who is called karta? Head of the family. Co-personers, members of half up to 4 degrees including karta. Okay, including karta. They are having the rights. Okay, acquire an interest right in partition. On partition, these co-personers will get the right of share. Jain and Sikh also be considered as Hindu undivided family. Jain, Sikh undivided family would also be assessed as half. Once family is assessed as half, it will continue to be assessed as such until it is partition. Okay, once this one is assessed as half, until it is getting partition, this family goes separately and this family goes separately. Once later on, each and every son separated and run their own business, then only it is going to be identified as a separate entity. Once it is separated, thereafter it is only individual business, not half business anymore. Is that clear? Even single co-personer is enough for half. Even single co-personer. From this it is very clear. What happens? Mr. A, Mrs. A. Okay. So, son 1, son 2. Okay. Here we have daughter-in-law, daughter-in-law. He died. Later on, these two sons died. Now this family has only female and Mrs. A being co-personer. Later on, Mrs. A also died. Now we have only two daughter-in-law in the family. They are not being the co-personers. Then half will not exist anymore. Is that clear? Half will not exist anymore. Let me brief all the points again. Hindu undivided family, okay, were administered by karta and where the property will be shared by co-personers. Okay, layer 1, layer 2, layer 3, up to 4 layer they are eligible. Thereafter, no one is eligible for claiming the partition, means asset in the partition. Right, clear? Now, what happens if they married and some daughter-in-law comes as a new one. They are simply members, not being the co-personers. Head being karta. Head being karta. Now, who are eligible for right in partition on the asset? Co-personers. When they are eligible? Next question. When they are eligible? And that too, this half is governed by Hindu law. Hindu law. Okay. Jain and Sikh also will fall under Hindu law, not Muslims. We cannot say Muslims undivided family here. So only Hindu, which includes Jain and Sikh also being Hindu undivided family. That one governed by Hindu law. Hindu law says these are the procedures. Co-personers are eligible. The last question, when they are eligible? When they are eligible? So the partition, right in partition is eligible. One is by birth, another one is after the death of the head. After the death of the head. Okay, what happens in Tamil Nadu? Come on, tell me. Will you get the rights by birth or after the death of your dad? Dad or Karta? When will you be eligible? Even dad is alive, you will demand, give me share. So, give me share. Otherwise, you will just go for agitation. So, then what does it mean? By birth itself, you are having the rights to claim your share from your family, half, Hindu undivided family. Okay, so be careful. If you go and claim your share from your dad, Dad, I just learned a new concept from today's income tax lecture. You have the right to share me, your share. You have around 20 crores, give me 10 crores. But be careful. If it is self-earned property, dad has the rights to distribute as donation to anybody else also. No need to give this to you. Be careful. It should be ancestral property. If it is being the ancestral property, then you have the rights. Okay, you have the rights. If it is not so, be careful before you fight with your dad. Right. You understand? So in Tamil Nadu, we usually get the rights in the ancestral property by birth. In two places, West Bengal and Assam, we get the right to get property rights only after the death of the Karta, the head. Once the head is no more, then the co-persons will have the right. So from this, it is beautifully named by birth. Friend like you will get the money by birth itself. Friend, Mitra in Hindi. So that's why it is called Miktakshara, School of Hindu Law. After the death of dad only you will get. Otherwise you have to wait for the Daya of your dad. That's why it is called Daya Bhaga rule. So we have two schools of Hindu law. One is Daya Bhaga, another one is Miktakshara. As per the Miktakshara rule, by birth everybody will get the right. In case of Daya, only after the demise of the Karta you will get the rights. The other members will get the right. And this Daya Bhaga rule will be applicable in two states in India. One is West Bengal and Assam. And rest of India, we get this Miktakshara Hindu school of law only. You understand? So two schools of Hindu law. One is Daya Bhaga, another one is Miktakshara. So I have completed two persons here. Individual. Now next one is Hindu undivided family. Is that clear? Two persons are over. Now, the Jain half in Assam comprises Mr. Suresh Jain, his wife Mrs. Sapna Jain, Suresh Jain, Sapna Jain, and his son Sardak Jain, and his daughter-in-law Mrs. Preeti Jain, his daughter Miss Seema Jain, and his unmarried brother, okay, Mr. Mrs. and brother, okay, brother of Mr. Preetham Jain, okay. Which of the members of the half are eligible for co-personal rights? Also find if the half is other than Assam. First one is all about Assam. Who has the right? Mr. Yes has the right. Others. Who others will be eligible for partition value? Okay. Son, daughter, brother also will have the rights. When will they have? Only on death of his life. Okay, by birth they will have the life only in other than Assam and West Bengal. As this being Assam, Mr. S only has the right. Okay, clear? And the common ancestor may be some X for him. As he is no more, Mr. S as well as his brother are eligible. As per which law? Assam's Dayabaka rule. As per Dayabaka rule. What about these two? They are eligible once Mr. S is no more. Clear? Dayabaka rule as well as Miktakshar rule. So let me explain again. Suresh Jain, Sapna Jain. Okay, Sapna Jain and brother. Okay, for these two, X being the common ancestor, if he dies, then automatically Suresh Jain as well as his brother will be eligible in case of Assam, Dayabaka. If Suresh Jain demises, thereafter his son and daughter will be eligible. Son being Seema Jain, okay, who's that? Sardak Jain as well as the daughter being Preetham Jain. They are eligible. When? Only after his death. Already his dad expired, because of that reason he is also eligible, and his brother is also, because they are falling under the same layer. Karta demised, the next layer will be eligible. So as he demised and these two are eligible, if he demised then these two are eligible as per the Dayabhaga rule. Okay, which is applicable in Assam and West Bengal. So this is the Assam situation. Also find if Huff is other than Assam and West Bengal. His brother Preetham Jain, his son Sartak Jain. Preetham Jain is the daughter and Sartak Jain is son. All are eligible right by birth. Who is not eligible? Daughter-in-law is not eligible, and Sapna Jain, Suresh Jain's spouse is not eligible because coming from the other family. Is that clear? So we have studied two laws, Hindu laws. One is Dayabhaga and another one is Miktakshara. In case of Dayabhaga, after the demise of the Karta's layer, the next layer will be eligible. Is that okay? In case of Miktakshara, okay, by birth all are eligible. All are eligible. Is that clear? Hope you will now able to understand the Huff case in detail. Now, company. Company means Indian company, body corporate, institution, association, or a body. These are assessed as a company from this date on or before 1/4/1970. Before 1970, some of the institution, association, body considered as a company for the taxation purpose still exist, can be considered as company, not necessarily being the company, not necessarily being company. Indian company, body corporate, institution, association, and body assessed as company. Since that day, still it's company. And institution, association, body later on declared by general or special order of CBDT as company can be company. So before 1/4/1970, institution, association, body yet was assessed as company only. Since that period will be considered as company. Thereafter we have some institution, association, or body, but CBDT confirmed these things are going to be assessed as company, then that is also company. So company has four items here. One is Indian company, another one is body corporate, next one is institution, association, body incorporated before 1/4/1970, fourth one institution, association, or body declared by the CBDT as a company. Next question, what is called body corporate? Body corporate is nothing but the company incorporated outside India. Naturally, it's a foreign company. So body corporate is usually foreign company, like incorporated outside India but operating in India or some foreign company. Now the question comes, what is called Indian company? What is called Indian company? So first you understand the company, thereafter you have to understand Indian company, thereafter you have to understand foreign company, you now understand the body corporate also. In general, company means four items: Indian company, body corporate, institution, association, and any body. Right. Body corporate means incorporated under any other law other than Indian law. let's go for Indian company first. Okay, Indian company first. Indian company is nothing but the company registered under Companies Act. Okay, Indian Companies Act 1956. Thereafter 2013 Companies Act. Earlier to that, old Companies Act also was there, and you might have registered in that also. Still exists. Tata Steel, Tisco, very old company, 150 years old, older than the company's law, right? That also company. So, company formed and registered under Companies Act, our principal office should be in India. One is either it should be registered in Companies Act, under the Companies Act, or its principal office should be in India, or any other law of state or union territory. Any other law of state or union territory. Okay. So, Companies Act. In US, you know, what is the meaning of USA? United States of India. Sorry, United States of America. Okay. United States of America. What's the meaning of that? All the states are united and formed as a country. But every state has their own Companies Act. Luckily, you born in India, so you have only one Companies Act, only one GST. If you born in USA, you have to study all the Companies Act. If you want to start your company in Texas, the rule may be different, and Philadelphia, the rule may be different. So you have to pay, you have to follow the tax laws of that particular state. Right, earlier, before GST, we too have a number of taxes. Tamil Nadu state VAT, Andhra Pradesh state VAT company. Very simple. Now, one more concept comes here, which is called domestic company. What is called domestic company? What is called domestic company? What is called domestic animal? Huh? What is called domestic animal? Are you a domestic animal? Sir, human beings also animals, sir. We are living in the house property, sir. So we are domestic animal. We are only domestic animal. If you add one more dog or cat in your home, that is also now living with you. Your dad will say, we need to purchase 2 burrata or 2 idli. For one is for my dog, another one is for his dog. Huh? Such a way the comment will be. Domestic is nothing but living in the same home. Domesticated. Domesticated. It means either you yourself, human being, or something living usually outside home can be brought to home. The same happens in case of domestic company. Usually living in India or living outside India, brought all the activity in India, then it is considered as domestic India, domestic company. Yes, it's a foreign company, but it has some role in India, then it is called domesticated Indian company. Like, okay. So, all the Indian company are domestic company. Some foreign company declare and pays the dividend within India. So, while declaring the dividend payment for their shareholders, making the payment, that dividend will be distributed from India in India. Then, though it may be foreign company, named as domestic company. You understand? Cat lives outside, but we are bringing it to our home, domestic. And foreign company incorporated outside India, but for some purpose we are bringing to India. Then it is called domestic company. You understand? Domesticated, domestic company. So, I have completed company and Indian company, foreign company, and domestic company and all. Hope now you'll be able to understand these meanings. Clear? Now, let's move on to the section 2, class 18, company in which public are substantially interested and public are not substantially interested. These two. So, companies are being classified here as widely held company, and closely held company. Closely held company. Is that okay? Now, this company has 1 lakh shares. 1 lakh shares. Widely held company means this 1 lakh share held by around 1,000 shareholders. Closely held company means all the share held by only 5 shareholders. Only a small family. Only a small family, 5, holds almost 99,500 shares. Another 500 shares held by another 500 individual shareholders. This will be called as widely held. This will be called closely held. Closely held company seems to be a private company as well as a small huffle like a private partnership like, isn't it? Okay, only these five will dominate all the 500 people. No one can dominate this five. So naturally, what happens? What the decision made by them will be final. This will be called as closely held. This will be called as widely held. Why such classification is needed? In case of closely held company, some cases, if he gets the loan, who these five shareholders gets any loan from the company, is considered as income and tax is leviable. Why, sir? He has the dominance over the company. He is in need of money, demands the cashier to pay 5 lakhs to me as a loan. Who is the person to ask the question to repay? No one is there. He himself makes the decision, everything. So if he gets the loan, that loan is also considered as a dividend and make him pay the tax. Such thing will happen later on. We'll study that along with income from other sources. Now, you understand that two classifications, closely held and widely held. So, closely held company or widely held company. The widely held company is nothing but the company in which public are substantially interested. Almost 1,000 shareholders. So many public are investing here. Publics are interested in this company. That's why it is called public are substantially interested or widely held company. Closely held company or public are not substantially interested company. This is the terms we can come across for these two. Now, what are called widely held company? One is where government or RBI holds more than 40% shares, then it is called widely held company. Government or RBI. Company registered under section 25 of the Companies Act, that will be considered as widely held company. Widely held company. Is that okay? Section 25. Companies with no share capital and declared by CBDT. There is no share capital, but it's a company. But CBDT declared this as a company. The company is formed only for the promotion of commerce, art, science, education, research, like. We have the institutions CA, CMA and CS, right? All these professional institutions are for developing the arts, finance and all, tax importance and all. Okay, those institutions will be declared as CBDT. Of course, there is no share capital, right? Okay, CBDT may declare as a company. That will be considered as public or substantially interested or widely held company. Mutual benefit finance company, like mutual funds, Nidhi, benefit funds. You have heard about lots of benefit funds like Gokulam chit funds. Earlier we had Himalaya benefit fund. Like we had a number of different funds, chit funds. Okay, even mutual funds. All these things are falling under public company or public or substantially interested company. Cooperative society ownership, where companies equity share carrying at least 50% voting rights. Allotted companies equity shares. They have allotted equity shares having 50% voting right. And public limited company. All these things are called widely held company. And closely held company, company in which public are not substantially interested. Other than the above 6 item. Other than the above 6 system. And in this case, XYZ cooperative society, and there is a company. They have allotted the shares, okay, or the company has allotted shares, which has more than 50% voting right. Then this will be and this will be considered as public or substantially interested. Okay, widely held company. So widely held company means where the government or RBI has participation of share capital more than 40%. Section 25 companies, as per the Companies Act, Section 25 registered companies. Another one is CBDT declared companies having no share capital. Next one is mutual benefit and Nidhi companies and cooperative society, and last one is public sector company. Those not falling under this will be considered as closely held company. Closely held company will be monitored carefully, where some provisions will be there to calculate the tax liability also, right? We'll see that later on along with the other chapters, right? Now let's go for section 2 class 23. Okay, 2 class 23. Firm, partner, partnership. Okay, what is called firm, who is called partner, what is called partnership? For all this question, There is no proper definition available here. It will be defined already. It is available already in the Partnership Act. Go and refer the Partnership Act. You just follow that here. Those definitions are as per the Indian Partnership Act. You just follow that. So you might have studied that Partnership Act, right? So there, the partner and partnership firm defined. You just carry over that same here also. And even LLP, Limited Liability Act also. Okay, Limited Liability Partnership. Limited Liability Partnership is also named as firm only here. Clear for the taxation purpose. Now, one extra point, income tax purposes, a minor admitted to the benefits of the existing partnership would also be treated as partner. In partnership firm, we have minor partner. Minor partner is eligible for sharing only profit, not the loss. That you know the Partnership Act rule. But in income tax, even the minor is considered as a partner for the taxation purpose. That minor should pay the tax on the income he earned on from the partnership firm. Is that okay? So you no need to have separate definition for the firm, partner, partnership in income tax. Now finally we'll go for the AOP and BOI. Association of persons and body of individuals. Now, body of individual, you have 2 or 3 individual persons collected as a group to do some business. Okay, for earning income or co-hire. Probably A being the owner of a house property, and B and C are his son. These 2 are his son, and A has a residential house property. Suddenly, what happened? A died. After the death, now the residential house property is not registered under A, B or C. It remains in the name of A only, common name. Yeah, of course, registration should be done later on after the partition. Now the residential house property dues 1 lakh rupees rental income. So B and C decides, okay, let the house be there itself. We can share the rental income. So subsequently, this 1 lakh is shared by B and C equally 50-50 later on. But the house property is still under the common name, not for B or C separately. These 2 keep the residential house property commonly for generating income to share. Okay, B has different intention, C has different intention, but they keep it for some period for sharing the profit. Sometimes later they can decide. They don't have any intention to do this as a business, then it is called body of individuals. 2 individuals, B is also individual, C is also individual. Maybe co-hire. In this case, B and C are the co-hire for A, and their intention is to just to share the profit. Common purpose, of course, maybe or may not be. B says, I want to discard and sell completely, need full amount. And C says, I need only rental income, I don't need to sell. Okay, until sell, we'll keep it temporarily. So both party will have totally different intention. Okay, may not be common intention, right? So the common purpose may be or may not be. Then this is called body of individual. This is called body of individual. So body of individual is nothing but a group of individuals keeping a property to earn the money, or they may have some common objectives for some temporary period to earn the money. For this, they can hold this. This is called body of individual. Association of person means Mr. A and XYZ entity. Mr. A, XYZ and co. Okay, he is engineer and XYZ and co will have a construction material selling shop like, okay. And these 2 form temporarily an AOP to construct a house property. And Mr. A says, I will have my engineering skill to construct the house property, but I don't have the money for purchasing all this material. The buyer says, I will take this flat or property, whatever it may be, finish up construct and full amount I will pay. Until that time I don't pay. Then what happens? Mr. A and XYZ entity both have a joint agreement. I will use my skill, you give me material, we'll use this to construct the house property. Later on we'll sell the house property, share the profit. So here, this entity is called association of person because Mr. A is a person, XYZ is also a person as per section 2 clause 31. Individual is also a person as well as XYZ. Firm is also a person. So one firm, one individual joined together form a group of entity like group entity like called AOP. It is not association of means body of individual because he may be individual but he may not be individual. So one individual, one totally different person or 2 different person can combine. company X, company Y, both join together to form a small entity for a temporary purpose. Then that comes under what means association of persons. You have to understand the difference between association of persons as well as body of individual. So in case of AOP, any person can be in this group, and their main intention is to earn the profit. Here it is not their main intention. They can just hold the asset also. In case of BOI, common purpose, definitely these two will have the common purpose of constructing and making the profit, but here not necessary. And in this case, Mr. A, and rather than XYZ, Mr. B can also join for this one. So automatically it becomes association of individuals, sorry, body of individuals. From this it is very clear, a body of individual later on may become association of person, but vice versa is not possible. Okay, AOP cannot become BOI, but BOI can become AOP also. Clear? So I hope now you'll be able to understand firm, partner, partnership, AOP and BOI and all. Clear? Now,